A new survey states that 43% Canadian mortgage holders only get one quote before locking in a rate. Leger surveyed 848 Canadian homeowners in August 2024 and found that only 40% of mortgage holders 55 and older got multiple quotes, compared to 58% of those aged 35 to 54 and 78% of those aged 18 to 34. Lower income households are much less likely to compare rates. Andy Hill, co-founder of EveryRate.ca, joined us earlier to unpack the data and discuss the importance of diligent shopping when it comes to a mortgage.
It was a bit surprising that 43% of people interviewed only got one mortgage quote. Um, we work in the online mortgage space, so a lot of the people that we deal with are shopping around. So it was kind of surprising to see that, not a majority, but a large proportion of the people surveyed only got one mortgage quote. Um, Another thing I think was just the demographic differences. So older populations, 55 plus, didn't shop around as much, as well as there was some like with people making less than $60,000 a year, they also didn't shop around as much. So it kind of speaks to the fact that some are maybe getting better rates than others, if they're empowering themselves with a search tool or multiple quotes from multiple lenders directly. I think if you looked at the demographic data where like ages 55 plus, I think generally those individuals have a bank relationship. Um, they're maybe a bit more trusting of the individuals that they're dealing with. And then if you looked at the 60,000 per year or less, those individuals just might not have as much mobility. So they may not think that they could qualify elsewhere. Therefore, they're just taking that first quote. A lot of the big banks, they don't advertise lower rates. It takes bringing competitive quotes back to those banks and then kind of forcing them to drop their rates a little bit. Right now, anecdotally, we're hearing about like 50, 60 basis point spreads between what people are negotiating at the bank and what they're getting on a renewal offer or something like that. So that can equate to thousands of dollars over the course of your term. Banks generally like to keep margins high, and so uh, they're always going to do what they can to kind of get the most amount of margin on that loan. But if you do bring them other quotes, you're pretty likely to get a pretty substantial discount offered to you, even from that existing institution. I think it's really important to empower yourself with the knowledge around the mortgage and around real estate. I think that ensures that you're kind of making a decision that you're happy about. And then when you're a couple years into the mortgage and maybe things have changed, the world looks different, rates look different, you can at least go back to that time when you made that decision. And therefore, you're not really like blaming other people. One kind of just small story about that would be in the pandemic when we saw those variable rate discounts really large, and we saw fixed rates being extremely low. A lot of people took advice to go into variable, and maybe they didn't fully understand that product. And so, a couple of years in, when rates were 4% higher than in the pandemic, those individuals were going through quite a bit of stress. And all it would have taken would be a little bit more understanding of that mortgage product and a little bit more shopping around just to get a few different pieces of advice, to really feel empowered in their decision to take variable or fixed. So shopping around, chatting with a number of different individuals about the mortgage, because when you're a first-time home buyer, you're really just trying to get as much information as possible to try to make a good decision, a good rational decision for the next few years.